2017 is the year in which Microfinance South Africa will be celebrating our 21 years of existence. 21 years ago, a couple of guys got together, they understood the need, and here we are. From the side of our leadership, I want to say we are immensely proud, but also thankful, and thank you to every member who's done his bit. I'm joined today by three people on our board. Our chairperson, Mr. Ockert Steenkamp, Francis Fraser, who's the chairperson of our FinCo and also a board member, and one of our board members and previous chairperson, Mark Seymour. We're going to just briefly explore a couple of angles and talk to one another in order for our members to get some understanding of what is going on in our minds and also to think about the future. Mark, if we think back about more than 2 decades, and despite the doomsday prophets, why do you think we have been able to get to this point and actually come of age?
Well, Henny, I think the clients that we typically serve have a fairly legitimate financial need, and I think the industry has been able to satisfy that legitimate need with a legitimate supply of products. And I also think that typically the microlending community tend to move a lot closer to their clients than the more formal financial institutions. So close relationships with client and fulfilling a legitimate need, I think, are the two key reasons why we've been around so long.
Does it say anything about entrepreneurship and the tenacity of our members, or is it totally removed from one another?
So I think entrepreneurship in itself is creating a mechanism where you can satisfy a need or identify a need and then satisfy that need. And it took entrepreneurship to actually see that happening because, again, the formal financial sector in the early 90s, they didn't see that need and they couldn't fulfill that need. So it took entrepreneurs to actually get it off the ground.
Fran, if we move on and we look towards the future and we look at the year 2026, what do you think would be required for us to be around at the time, to be viable and to be sustainable?
Henny, I think building off what Mark said about the entrepreneurial spirit of MFSA members, I think that's what will take us to the next stage, because I think we've got to find new models of serving our customers that probably explore how we can reduce the costs we face to serve customers, and which also enable us to provide a broader range of different services, financial and possibly even non-financial services, that make us more viable and which also meet the needs of customers more fully.
Are the needs different from 20 years ago and what it will be 9 years from now?
The market is definitely, or the industry is maturing. There's more maturity in the market, obviously more competition in the market. We can see that the banking sector, the retail sectors have also entered this market space. To be sustainable going forward, you'd have to operate in that changed environment.
Yeah, and I think from a customer point of view as well, at the time when MFSA started, there was an undersupply in the market. Now I think there's much more readily available different sources of credit.
If you have to talk to members out there who's out running their businesses and doing what puts the bread on the table, as it were, and you have to share the issues we have to deal with behind closed doors, as it were, what is your sense and what is your experience? And just share with us.
I think a reality of our industry today is to balance good and bad business. We know and see that the collection of your bad debt book is very challenging in a legislative environment. We need to start making good and healthy financial decisions when granting credit to individuals. We will need to start to also evaluate our own operations, because what we see in a lot of businesses is that we grant credit on very borderline cases.
If the environment was functioning perfectly, and let's say we strive to achieve that by 2026, what would be the subjects up for discussion at a board meeting, and what in your mind would be engaging with the SARB, the NCR and say the DTI?
The board of the MFSA, it's our view and was our policy that we rather negotiate around the boardroom table than to go to a courtroom. The MFSA could take hands with the regulators. We can establish good relationships and build on that, deal with some of the issues of the industry. I mean, if there's a problem on our side, we can fix it by speaking to each other. We need to deal with this differences between associations and regulators and rather get together and find a mutual midway where we can deal with these issues and support each other and get these issues out there at the consumer, at members, at credit providers, all levels of society.
I read a really interesting paper about how in America about a third of the population are still unbanked or underbanked. And one of the challenges that they put forward in the paper was the fact that we're trying to serve a market with the same products, but with price caps or at least a sensitivity towards price. It's actually not feasible to do that from a business point of view, and it also doesn't necessarily meet the needs of those unbanked or underbanked clients. And what they actually put on the table was an idea of creating a product which effectively is a cash smoothing product, which acts as a loan at times and a savings mechanism at another time. Now, conceptually, a product like that would be impossible in our regulatory environment. So I think for me, we really need to have a much more inclusive and progressive financial inclusion policy that's not so fragmented.
So, Mark, in light of your introductory comments about the fact we've been serving the needs, and my follow-up question about what does the future look like, as an entrepreneur, how would you respond to that?
We sit in a complex regulatory environment, and we also sit with the cost issue of running a business. There's a lot of costs that have gone up, and the cap has, if anything, come down. It has not accommodated the higher cost. So operating in a complex environment and doing it in an efficient financial manner, I think that's the challenge lies somewhere around there. And instead of being disheartened by all the regulatory challenges that we're sitting with, we should allow that entrepreneurial spirit to come out, to say to ourselves, let's take the challenge and let's find ways to overcome the challenge and do it in an efficient manner.
Having said what you've said and having heard what we've heard, what should a member be doing in the next 18 months, which in your mind will contribute to his sustainability and success?
Compliance risk is one of the biggest risks in a business. If you're not complying, overnight you are able to be taken out by the authorities. So you have to comply with the legislation, and you have to find a way to do it in a cost-effective manner. Otherwise, you will not be able to survive. So I would say the answer lies somewhere around there.
Do you think that's doable?
I think it's a challenge. So I really think it's a challenge, and we're not seeing too many models except for the online models, where they're able to do it in a more cost-effective way, but there are slightly more compliance challenges if you, for example, are in an online environment. So I think the models probably have to further mature before we really get to a proper answer.
Fran, you've had the privilege of talking about the long-term view. If you have to cut it back and fragment it down to the next 18 months, your sense?
I actually totally agree with Mark in terms of compliance and reducing the cost to serve. So are there delivery models that we haven't thought of that can do that? But I would add to that the whole notion around treating customers fairly and how we ensure that MFSA members are very objectively the most ethical consumer lenders in the market.
Okay, Orchid, your sense and some other views you may have which you think we can share?
Firstly, we need to organize the industry. We need to get into an organized structure. We deal with a situation where the cost of doing business and the capping of rates and fees by the regulator are in an environment which is not sustainable to our members and the industry. And for that reason, the association took a very difficult decision, but there is no other option as to try to create an environment in terms of the caps of rates and fees where we can have a sustainable business.
Doing nothing is not a solution. The association is action-orientated. We are strategic in what we do, And we do understand that we have to do things now in order to be around in 2026. My plea to members and my encouragement is to really have a deep look at yourself, have a deep look at your business, have a deep look at your relationships, and look at your own mindset as well. We cannot be the prophets of doom in our own business and do nothing. So from my side, once again, thank you to the members who participated here today. If it was an easy road, everybody would have been around. There are challenges, but the MFSA is committed to serve our members in terms of the mandate which you have empowered us with. So on that note, once again, thank you for your time, thank you for your wisdom, and we're looking forward to the next 9 years.